Here's a Fed governor on national television.
And there is an infinite amount of cash at the Federal Reserve.
You know, it's like Ben Bernanke said, we can print money at no cost. Nothing comes at no cost. Nobody has infinite anything. When do you have the Madoff moment where enough people want their money back that you can't meet redemptions? Same question you're asking about the passive funds. It's the same question somebody will be asking about commercial real estate when it blows up. As a matter of fact, I messaged my best friend and I said, short everything you can get your hands on in commercial real estate. I'm like, we're there. Like, the time is now. And everybody's walking around, as they said in The Big Short, like they're in a goddamn Enya video. We're like, oh, everything's fine. Just sit back and watch. It's going to get fucking good, man. Like, soon. Give it 12 to 18 months. And I'm going to be like, told you, it was right in plain sight, right?
Hello, everybody, and welcome back to the Bitcoin News Channel. I'm your host, Rob Wallace, and today I am very grateful to be joined by Chris Irons, better known as Quoth the Raven. For over a decade, Chris has been exposing our BS economy, with takes featured in the Wall Street Journal and the Financial Times. Now he runs the number 11 ranked finance newsletter over on Substack, known for its no BS commentary. Chris, how you doing today?
Good. I'm happy to find out I'm number 11. I didn't even know that.
Yeah, on for paid users, you're number
How about
11.
that?
That's pretty
Fucking
cool.
go,
It's
man.
quite the accomplishment. So yes, talking about your writing, earlier this month, you wrote a piece over on X outlining how you see the next 6 to 18 months playing out for the economy. You say that we're in inning 2 of 9 of a real recession and that it feels like end of empire stuff. All right, tell us what's going on.
Well, I think I wrote that after we got the downward revisions in the jobs numbers the first time, I think. But regardless, it doesn't matter. We're seeing real signs that the economy is slowing in a way that, I wrongly predicted it was going to slow a year or two ago, or maybe starting 2 years ago when they started raising rates. Because in my mind, I thought, positive real rates on the biggest bubble in history. And eventually, the math just makes it so that something has got to give. What I didn't account for then, and what I've told my kind subscribers who are nice enough to me to give me grace and understand, I try to admit when I'm wrong, and they don't expect me to be right all the time, was that, there's a lag really between monetary policy and its effect on the economy. And wasn't really thinking about that too much. I kind of just thought, all right, well, we have so much debt that this is going to have to implode immediately. And of course, that wasn't the case. And even the San Francisco Fed at one point came out and wrote an article saying that there was more liquidity pumped into the system from COVID and more in savings than even they had estimated. And certainly, I didn't take that into account. But really, here we are now, like maybe 2 or 2.5 years later, and the signs are showing up. The things are happening now in the data that I thought were going to happen 2 years ago. And obviously, I'm not surprised because real rates have been positive for the better part of multiple years now. But really, now you're seeing subprime auto companies go bankrupt. We saw Miami luxury housing developer go bankrupt a couple of weeks ago. Um, you see AAA rated shit in commercial real estate defaulting and going for pennies on the dollar. You see a slowdown in freight shipments, and this morning I saw a slowdown in heavy truck sales. The kind of things that you see really in recessions, and I've seen a number of signals um, with subheadings like worst data since the pandemic or worst data since 2008. So you see it in personal spending, delinquencies, credit card delinquencies, obviously student loan delinquencies now that people are responsible for paying for them again, have skyrocketed. And really it's crunch time for the American consumer. The cost of capital has remained high. Anything with a variable rate has gone up for them over the last, 2 years, and people's savings are dwindling. And now what the bad job number does does two things. I mean, one is it forces the Fed to kind of work the gas and the brake of their two mandates at the same time. But the second thing it does is it gives the investing public a digestible story as to the economy really slowing. And so, part of an economy holding up is psychological. It's like inflation. Once everybody knows prices are going up, then everybody pulls forward demand and rushes to buy things quicker, and that drives prices up even further. And the same thing goes for a deleveraging cycle in the economy. I mean, it will always happen. The market will force it to happen. But the psychological element feeding on itself can make it happen a hell of a lot quicker. So there's a huge difference between where we were a year ago and saying, hey, the job numbers are fine, the unemployment rate is still low, the economy's fine, versus now where those very well understood and the jobs numbers are like probably one of two macroeconomic indicators that can be discussed around the dinner table at home. You don't need a fucking PhD from Yale. It's something that every mom and pop family understands and talks about: prices, the job market. And so that is solidifying the default position, I think, as the economy is slowing down. And psychologically, that's just going to, it's coming at the worst possible time right now, where again, it's crunch time for the American consumer. Companies are laying people off. We are at the top, and we have probably crested the top at this point as far as the economy running on overdrive. So the only question now is how it unwinds and what happens and what the timing is. And for me, what I wrote in that post and what I see happening over 12 to 18 months, and again, take this with a grain of salt because, I'm a tattooed former bartender. So, I'm not an economist, but common sense and 20 years experience in the industry have me feeling as though what will happen is we're going to have a sharp deleveraging at some point. We're going to have another like Silicon Valley bank style event where, on a Friday, they kind of announced they're doing this fire sale of equity to raise capital. And by Monday, they've been hit with $60 billion in redemptions. That's how quickly things can change. Really, the regional bank sector was pretty much toast at that point and then got immediately bailed out. But that's going to happen on a larger, wider scale. I don't know if it'll be commercial real estate that sets it off or crypto that sets it off, but that will happen. We will have a sharp like deleveraging that will force the Fed to act quicker. It won't be quick enough because again, there'll be that same lag in monetary policy to hitting the actual economy. We'll probably see continued sell-off after that. Most of the time you see market bottoms after the Fed has already started cutting. And then from there, that next round of quantitative easing is going to take what is already uncertain and uncharted territory for the U.S., at least as far as the way that the world looks at our creditworthiness, and it's going to make it worse. And that's going to eventually probably result in yield curve control in the bond market losing its footing and the Fed stepping in and buying bonds. And then we're going to see some type of extraordinarily destructive inflationary cycle, probably the likes of which we've never seen. So that's my general thesis. Happy to be wrong. Been wrong for a large portion of my career. Not here to be Mr. Finance Guy, just trying to do the best that I can to put the pieces together and examine the objective reality of the situation, because Lord fucking knows you're not going to get that on CNBC. Nobody's on CNBC talking about this today. You got fucking Tom Lee beating off to Ethereum, and that's about all that's going on today. And everybody's walking around, as they said in The Big Short, like they're in a goddamn Enya video. Everybody's walking around like, oh, everything's fine. Give you a little story real quick. True story. 2 nights ago, I was out at a bar in New York, minding my own business. 2 guys sit down next to me, 2 young kids, both, one was 25, the other one was 31 or 32. And both were in commercial real estate. And I said something to the effect of like, I'm sorry to hear that. Like, I know things are pretty rough in commercial real estate. And both of these kids said like, it's bad. And I said, let me ask you a question. What's going to happen when I said, first off, does anybody have their books marked appropriately? And they both said no. And then I said, all right, well, what's going to happen when somebody goes looking for a bid in commercial real estate and really has to liquidate? And they were like, we're going to need a bailout. That's what the one guy said, you know? And I'm just like, all right, well, here we are. Like, this is where we are in commercial real estate right now. So it really did feel like that moment in The Big Short where he goes down to Florida and sees everybody trying to sell their house, and he gets on the phone. He's like, yeah, okay, we're in a bubble, like short it all. As a matter of fact, I messaged my best friend after that conversation. I said, short everything you can get your hands on in commercial real estate. I'm like, we're there. Like, the time is now. So again, he knows I've been wrong a lot too. Now you know I've been wrong a lot too. None of this is financial advice, but that's my general sentiment right now.
Yeah, it does look pretty scary if you take it from a certain vantage point, right? But I know that you have been with your eyes wide open since 2008. You've been a big fan of Peter Schiff, and you've been calling out the BS for over a decade in terms of what's going on CNBC. They just paint a rosy picture. And the thing is, the number has gone up, right? And so it takes a lot of guts to really call it out for what it is. And but at this point, there are just so many different layers piling up on top of each other, right?
Well,
And
it's different when the number goes up, but people are feeling the negative effects elsewhere. You know, it's easy for unsophisticated investors and people that don't understand how the economy works to just point and grunt and be like, you know, number go up, good, right? Like stocks start down here at the bottom right and they go, they are bottom left and they go here to the top right. And to them, like that looks great. It's the illusion of wealth. It's paper wealth, you know? If, you know, but it's like if you look at the market in gold terms, or you look at the market with some type of anchor other than the nominal price, you know, you understand that people are really being brutalized by inflation right now. And, you know, there's been some earnings growth, but inflation has also driven the market up over the course of time. So the scoreboard might say one thing, but the man behind the curtain is doing something completely different. And that's a far more complex thing to try to understand to good people out there in the country that are just working normal jobs because they don't have time to fucking understand monetary policy. They're too busy being plumbers and like making the world work. Um, so yeah, that's just to address that. Sorry, I didn't mean to interrupt.
no, absolutely. And so the stock market is being carried by these seven stocks, right? And you often talk about the passive bid and what if that turns around. So explain that to the audience.
Well, the market's being carried by the Magnificent Seven, right? The Magnificent Seven have a disproportionately large weighting in many of the funds that are automatically purchased by retirement plans and ETFs and things of those nature. So, you know, a ETF used to be that the price of an ETF would go up because people were buying its components. And now what an ETF is its components go up because people are buying the ETF. And so throughout the working world and the investing world, you have trillions of dollars in passively managed funds. These are your automatic retirement funds. These are funds that people have set up to invest in on a recurring basis. And they buy ETFs, and the ETFs then buy their own components. And this happens regardless of the valuation that the components have. And so, you know, the program sees by Microsoft, and it does it whether it's at a PE of 10 or whether it's at a PE of 40. Um, and so that has been a kind of incessant bid in the background for the market for years that has grown considerably as the universe of ETFs has grown considerably. And it's this big, giant, massive machine that has been operating to consistently put a floor underneath the stock market. Disproportionately through these seven names now, which is why you see the S&P green on days where there's more decliners than advancers, because the advancers that matter, the heavily weighted ones, are going up. And the idea is, and this is all Mike Green's thesis, I don't want to take credit for any of this, and pretty much everything I was going to say and have said is somebody else's idea that I just listened to. So I'm not sitting at home like fucking figuring this stuff out on my own. I'm just listening to podcasts and reading. But Mike Green really made note of this and just started to ask the question of what happens when these $50 trillion in passive funds start to become sellers instead of buyers. And if they ever do become net sellers, it would take a lot for that to happen. It would take some real turmoil in the job market and a lot of people trying to reach into their piggy banks at the same time. In essence, you know, people in distress, consumers in the crunch that we're in now, where people say, "Oh, I got to tap into my retirement funds to deal with this." If that happens enough, Not a lot of these funds have a tremendous amount of cash to meet redemptions. Some of them have taken on leverage to do so. And his thesis is basically if it gets to a point where those funds have to become net sellers instead of buyers, that could be catastrophic. That could essentially be like the rug being pulled out from underneath the market. So it's just something to keep an eye on. And it's something that is directly tied to the jobs number because jobs equals 401ks equals passive buying, so or any other number of retirement vehicles that do those types of purchases. So just another reason to pay close attention to the jobs number, in my opinion, and why I wrote the article that you were referencing before. So the passive bid, it works two ways. So far, it has only worked one way, and God help us if it becomes a net selling machine instead of a net buying machine.
So let's think about the situation where it does become a net selling machine and the market does have the bottom pulled out from beneath it. Of course, the Fed has to step in and print a lot of money, as we saw in 2020, adding trillions of dollars to the balance sheet and buying up mortgage-backed securities and corporate debt and whatnot. The question is, how does that look in a situation where we have debt to GDP over 120% and the economy is in this questionable state?
How does it look? Not fucking good. That's how it looks. I mean, you tell me. I don't know if you're looking for an exact answer of what's going to happen, but no, I mean the country is in an extraordinarily precarious position in terms of its balance sheet, and like you said, this debt to GDP ratio that's the highest it's been in recent history, and we really don't have any plans to cut spending going forward. And so, what can we do? I mean, Lynn Alden says it best, right? She says nothing stops this train. Like the plan is really to just inflate away the debt and to just, try to lean gently on inflation a little bit more to give the appearance of solving our problems by patching up nominal numbers, while at the same time doing what that policy has done, which is widen the inequality gap and brutalize the lower and middle class with inflation. And that's going to be it. And every time the Fed does it, they take it a little bit further. So maybe this go round, they'll buy ETFs, which they've never done before. There was always this conspiracy theory that the Fed's buying stocks. I was, even today, man, I see a day like today where the market looks like it's really going to start to cascade lower at one point, and all of a sudden, no, here's the bid. All of a sudden, magically at the low of the day, fucking pops back up X amount.
I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code Bitcoin News and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video.
It just seems obvious that the next time they do QE, they'll just do it a little bit further. Maybe they will buy stocks. Maybe they will buy ETFs. I mean, so we'll just go full Japan until our market is trading sideways for 10 or 20 years. But really, we've broken things, I think, beyond a point of any repair. And so really for me, my investing thesis has, other than buying, extremely deep value, things where equities where I see extremely deep value, to buy things that can't be printed, and obviously that's my gold and silver and, real estate thesis and to some extent my Bitcoin thesis as well. So, so that's where I am with that.
And they're going to have to stick their hands deeper and deeper into the bag of tricks. And one thing that's on the lineup coming is probably yield curve control, right? Trump has got his new man on the Fed governor board, Stephen Moran, and it seems as if he wants to cut drastically. But this third mandate, yield curve control. Explain in simple terms, as you do so brilliantly, what yield curve control is and what that will do to inflation.
It's just bond buying. It's just trying to control where the bond market, allows yields to go. Yield curve control is just, bond prices go up, yields go down, bond prices go down, yields go up. And so what's yield curve control? The yield curve is you have your shorter dated bonds all the way out to your longer dated bonds. They want that to look like it's in some type of orderly fashion. And so they say, okay, we're not going to let the fucking twos or the tens or the 30s get above or below. So the Fed's a buyer at 4% and the Fed's a seller at 4.5%, or the Fed's a seller at 4.5% and a buyer at 4%. They just put a bid and just make a market in the bond market. The idea being that, if the Fed cuts down to 2% and the long end of the curve, yields go up instead of down, then it's like, okay, well, that's the bond market saying that, like, the credit worthiness of the country is shot. And that may be like what happens in the 30-year might be what happens, might be what forces yield curve control, or even in the 10-year. So we'll have to see if the bond market does in fact crack up, but that's just a fancy term for just, monetizing bonds.
Yeah. And when they do that, they're essentially printing money out of thin air, right?
To create some, well, they're going to be forced to do it. Yeah, exactly. They'll be forced to do it. I mean, it creates the illusion that everything's okay, but also it prevents rates from going up, which they'll need to do because we can't have the long end of the curve at 8%, or 7% with $37 trillion in debt. We'll go from already bankrupt to completely fucked very quickly. Those are finance terms.
And you end that piece by saying that the Fed, by doing all this stuff, they're going to, quote, save the day. At least that's how they'll be portrayed on CNBC. And the vast majority of the public will think that they are the saviors of this system. Just like we saw Ben Bernanke with the cover of The Atlantic of The Hero in 2009,
Yeah, it's
right?
sick. Yeah, it's sick. Everybody should go look at a chart of like the wealth inequality gap. Look at like the lower 50% versus the top 10%. And just look at how that has widened since, we went off the gold standard. That's really what the Fed is doing. I mean, they're under the guise of saving everything. They're just widening the inequality gap. The rich are getting richer. It's funny too, because a lot of the Democrats press for these types of solutions. They want they want, they're huge fans of the Fed, but they don't even understand that, monetary policy is like the fucking third rail in this country. Nobody talks about it. The Republicans and Democrats have both kind of silently agreed that they're okay with it. And it's regressive, and it's just it's brutalizing the middle and lower class, and in multiple ways, not the least of which is inflation. And just destroying the purchasing power of the dollar, making it impossible to save. So that is what will happen. We'll have a sharp deleveraging. The Fed will come in and they have one trick. They're always talking about, oh, we have tools and this and that. They got thousands of economists and a $3 billion, building that they work in. They have one fucking button, that's print money, lower interest rates and print money. That's their only tool, and anytime they do that, access their, quote, infinite cash, as Neil Kashkari called it, just brilliant. I mean, I don't understand how anybody can listen to somebody say that and be like, that makes sense. You don't need to be a fucking finance major. You just have to have a molecule of common sense, and here's a Fed governor on national television saying the Fed has infinite cash. It's like Ben Bernanke said, we can print money at no cost, and what he meant was no cost, like it doesn't cost anything to run, the fucking printer. Like it costs very little in electricity. But of course there's costs on the populace. Of course there's costs on the economy. I mean, there's no, like, they act like this is the secret fucking game genie cheat code for the whole economy that's here to do nothing but usher in utopia, and that there will be no consequences. And anybody, you don't need to be a philosophical expert on economic laws or just, the nature, human laws. Even you could zoom out even further and just karma in general and the way that the world works. You don't need to be an expert on all those things. Nothing comes at no cost. Nobody has infinite anything, So what will happen is these people will be hailed as heroes, but the effects of their policies will be will continue to shoehorn the inequality gap wider and make things worse for the lower and middle class, and will continue to consolidate wealth among the upper class. And then, we'll go for the ride all over again. We'll be reliving 2008. Peter Schiff said it great in one of his podcasts. He said, you know, Ben Ben Bernanke's book was called The Courage to Act, and it should have been called A Coward's Way Out. And I, like that fucking nails it, because he couldn't let the banks fail. At that point in time, they were going to lock up the global economy. So all right, like here's my solution. The man who didn't see subprime as an issue, subprime is contained. The man who sat in front of Ron Paul and said he didn't know why central banks held gold in reserve. Long-term tradition? I don't know. And Ron Paul's like, well, why don't they hold diamonds? He's like, oh, I don't know. Like that guy, fucking, you know, people act like he had to sit at home and tirelessly pine over thousands of spreadsheets. And I mean, yeah, there were negotiations between Paulson and the banks and stuff, but there was never a real negotiation about like what the solution was. It was always just, here's the money, print our way out of it. Like, so fucking 5-year-old could figure it out.
They were going to save their buddies at the end of the day, of course. But looking back on 2008 with almost 20 years of perspective, do you think that they could have let the banks fail, that America could have functioned moving forward if Bank of America and Wells Fargo and everybody else no longer existed?
Well, it would have been catastrophic at the time, but we'd be probably a lot better off now. And it would change the attitude about banking. Probably you wouldn't have had Silicon Valley Bank collapse if that had happened, because the general sentiment would be that, there's no bailouts. So banks are responsible for their own dumb fuck decisions. And all these fucking imbeciles like Oprah Winfrey and all these people that invested with Silicon Valley Bank, who was taking their money and turned it around and put it into pre-revenue VC crap with no bid. All of those people would have been forced to do due diligence before they put their money somewhere, instead of just saying, well, a bank's a bank, the Fed's got our back and that's that. So, yeah, the landscape, I think, in banking would change significantly, would have 20 years later. We'd probably be in a steadier spot with banks, understanding that the free market is going to determine who is and isn't creditworthy and who isn't being responsible with their capital. And I think knowing that, it would affect the behavior of the banks significantly. And you'd probably have banks in a lot more conservative positions than wherever they are today, But yeah, it would have been, there's no doubt it would have been catastrophic for, years. And then we would have had an actual recovery on our way out of it, which, again, not just economically probably would have put us in a better position, but just in terms of sending a message to people going forward on moral hazard and behavioral economics and the psychology of, how you're going to conduct yourself in the finance industry. It would have set a totally different tone.
And I remember having my eyes open during 2008, 2009 at this, seeing the bailouts at the money printing. And I was a big reader of Zero Hedge at the time, Stansberry Research. And I was a believer that hyperinflation was around the corner. But
yeah,
somehow throughout the 2010s, and they were able to keep a lid on all that. And inflation, quote unquote, wasn't that bad.
It went to financial assets, like it went to housing prices, it went to stock prices.
But now it seems as if we do go through another big print, are we on the precipice of a hyperinflationary event here in America, the land of the money printer?
Yeah. I mean, look, dude, I'm not trying to be a fearmonger, but go look at a chart of the NASDAQ over the last 20 years. I mean, it's like, okay, it's putting along and then it's just parabolic. I mean, that's hyperinflation in the NASDAQ, so will it show up in consumer prices eventually? But all of that liquidity has to go somewhere, which is part of the reason I'm in Bitcoin. among other reasons. But it just feels like at this point a blow off valve for liquidity for the next time the Fed prints money. And so, you know, to me, certainly I feel, look, I'm with you, man. Like I'm zero hedge Austrian school guy, always kind of thought hyperinflation was around the corner. You know, didn't happen. Do I want to cautiously say that, like, yeah, it does feel like we are really at this strange inflection point now. I mean, and I'm not just saying that, like we're seeing a generational move in gold right now and silver. Generational. I mean, when gold decoupled from real rates a couple years ago, I said something is wrong. Like, the gold market is not acting as though it normally would. And I think the geopolitical landscape with the U.S. seizing $300 billion in Russian U.S. dollar denominated reserves, and with the dollar hegemony kind of in question, and the BRICS nations now coming together to create, the new methods for trading, and the Shanghai Cooperative, and all of these things, and you know, and central banks voraciously buying gold. It does feel like we're at a batten down the hatches kind of moment. And don't take it from me, take it from gold, which has tripled in fucking less than 10 years from, 1300 to 3800 or wherever we're at now. I mean, that is a ridiculous move higher that by the way, I think it's going to keep going. Um, so it does kind of feel like something is breaking. And I think the terminus here, the spot where, you know, I don't even know what you want to call it, the inflection point here, I think is going to come when the economy in the US finally does have this next sharp deleveraging. Because, the last time the Fed bailed everybody out in 2020, there were a lot of memes and a lot of jokes about it, because you got all these Bitcoiners now that understand monetary policy in a way that younger generations never did. So you have average people that understand how the Fed works, which that right there is like, the emperor has no clothes. People are figuring out that, what you had to be an economist to figure out 20 years ago, which is that, looks like a giant Ponzi scheme. So people are figuring that out now on their own. And, last go round through COVID, it was this kind of like running joke that, like, oh yeah, all right, what do you got? Infinite money? Like, you're just going to print forever to solve the problem? Like, you're a Bitcoin guy. You've seen all the memes. This go round, fucking everybody's on notice. Everybody's looking at the Fed and just, like that Simpsons episode where they're just like, say it, like, say it, and he's going to be like, all right, we're cutting rates. Everybody's going to be like, oh, we do it, So, like, they've become a fucking, like, caricature joke to the everyday person. And I think that really could be a loss of confidence that, I've been talking about will happen for a decade, but hasn't. I wrote an article back in like 2016 called "The Fed is Gutless, and by the time we realize it, it'll be too late." And I think about that title all the time. People get it. They know what's going to happen. It's not going to be any surprise to people that they're going to bail out the markets, and the stock market's going to go up, and the inequality gap's going to widen. The difference is, like, people now are going to react to that differently than they did in years past, and so it really does feel like this deleveraging, like this go round, it does feel different. Like, for me, I don't know. For me, it feels different. COVID, I told people this is not a financial crisis. And matter of fact, after COVID, after the huge dip, I said, not financial like 2008, I mean. I was saying, oh, what looks attractive to me are the banks, Goldman, JP Morgan. They were trading at, half times book, things like that. At a point, I remember buying American Express, a couple other like financial names. They've all tripled since then, quadrupled since then in like 4 years. The idea was, though, that that's not, we were just having a legitimate like production and supply chain slowdown. It wasn't a systemic financial collapse. There was no like major contagion like there was with AIG in 2008. This go round now, with what's happening in gold coming out of that. I think, we overshot the mark so fucking far, and people were put on such notice about how oddly the system works, that this go round now, it does feel like that sovereign debt style, you know, issue could finally be at hand. The one that Peter Schiff wrote a book about like 20 years ago when he wrote The Real Crash, which, he, to him, it's obvious. He can see it. Okay, it's coming, and it's coming tomorrow. But like, no, it didn't come tomorrow. Sometimes these things, we're talking about events, and, I wrote, like you said, the end of empires. Like, these things happen over the course of 20 years, 40 years, 50 years, 200 years. So, but it does feel different, man. And I'm not trying to be sensationalist at all in saying that, but I've never seen anything like this in the gold market since I've
Yeah.
been following gold and silver. And it doesn't really, I can't remember any time that I've been in the industry where inflation has been out of control, and the jobs numbers are going to start to decline at the same time. So, name me another point in recent history where the Fed has had to cut rates with inflation at 2.8%. Like, that's not good. Like, that's an unenviable position for Jerome Powell to be in. And the consequences are going to be bad. The only question is where they're going to show up and when.
100%. And I remember back in the 2010s when I was thinking hyperinflation was coming and being a real big gold bug, but the price just underperformed, right? We were at 2015 and gold was at like $1,100, and there was like a sovereign debt crisis in Europe at the time. And there was all these reasons why it should be performing like it is today. But back then it was just flat. And that led me to Bitcoin. I was like, there's got to be something else, some other alternative here to be a inflation hedge or a sponge for all this excess liquidity. And that's what opened my eyes to Bitcoin. And listening to your podcast, you had Larry Lepard on the show multiple times over the years, and he kept nudging you towards the orange pill. And it sounds like you finally took it, or maybe just a small one. But Bitcoin is part of your portfolio, and you do see it as a defensive mechanism against this crazy money printing now, correct?
Yeah, I kind of see it. I mean, I almost kind of acknowledge it as a risk asset. I mean, it trades like a risk asset. I still think it's probably more of a risk asset now than it is sound money. I just think it's a risk asset that has the potential to go significantly higher. If not, I think it'll get killed when we have our initial sharp deleveraging. I think everything will. I think Bitcoin will probably get killed more than gold. But then I think after that, then I think, it'll probably skyrocket with everything else. Um, to me, it's not, to me, gold is still first and foremost 90% of my sound money kind of foundation. My biggest positions are gold miners, silver miners, gold, physical gold, silver. Um, those are huge positions for me. But Bitcoin is a small position. And as I explained on McCormick's show when I did his, my coming out party or whatever you want to call it, I just, it feels like an idea that's time may have come. There are a lot of reasons to doubt it. I think also too, there's a lot of unknowns going forward, but um, I like the idea that it can be seen as an exit ramp from the system as it exists today. And I like the fact that it could return the power to a significant amount of people that wouldn't otherwise normally have it if it does, garner long-term worldwide adoption. And, I'm not about to sit by and not be a part of that if that is what takes place. I mean, I'm prepared to lose 100% of what I have invested in Bitcoin. Um, but I also don't want to not be along for the ride if it does become an idea whose time has come. I mean, I'd like to think I'm smart enough to know what I know, and I'm smart enough to know what I don't know, and I don't know you know many of the intricacies that a lot of Bitcoiners do understand. I know the basics. I know that there are a lot of people smarter than me that have a lot of confidence in their Bitcoin investments. I know that, when Michael Saylor says something like, all right, well, you know what the problem is with this system, what are you doing to fix it? That, like, okay, that rings true a little bit. Um, but I think that Bitcoin is always going to be superseded, at least for the time being. It's always going to be superseded by gold, and you're seeing that here over the last 6 months or year or however long, where gold has really gone bananas, and Bitcoin has kind of underperformed gold because the shit is really hitting the fan here. And I think Bitcoin still trades like a risk asset. At some point, those magnetic poles may reverse and Bitcoin may actually be viewed as a safe haven. But for me, the fact, it's very simple. The analog kind of physical 5,000 year track record of gold, for me, still supersedes, a digital token, as the kind of underpinnings of sound money and hedges against. But I understand the use case for Bitcoin, and I think a lot also hinges on how well the layer two is developed and the Lightning Network is developed, and how much it can be used as currency every day. Um, it's interesting. I got to the point where it was something that I decided I wanted to stop shit talking and at least have a little exposure to. And that's where I am now. So,
Yeah. Well, the amazing thing about Bitcoin is that it can start as a small part of your portfolio, but then grow into a much larger one. And
yeah, well,
as the,
anything can do that.
anything can do that, but Bitcoin has a particular penchant for doing so.
Well,
And
historically it does, but hopefully it will continue to. But past performance is not indicative of future results. There's a reason that every financial advertisement or brochure or anything you've ever seen always says that.
yeah, absolutely true. But just from a pure fundamental layer, you can see how Bitcoin can solve some of the problems that gold faces, correct? Such as the
Well,
portability and the being able
of
to use it
course.
as a daily currency.
Of course. But you can also tokenize gold too, which also solves some of those issues.
But then you're dealing with a ledger and you have gold in a vault that can be moved around without really affecting the ledger. I mean, I think the beauty about Bitcoin is that the token is the ledger, right? And that when you move Bitcoin, you're
The,
changing.
the beauty of Bitcoin is that it's Bitcoin and there's only one Bitcoin. And so, when I was learning about it and learning about, the open source nature of it, you know, you're like, okay, like anytime somebody makes a change, like it just makes a fork, and it's like, all right, people have the option to, go in that direction or just stay with Bitcoin, and everybody winds up staying with Bitcoin. And so, like, it's it's one of one, and so that therein, I think, is the sanctity of the idea. And obviously, um, there's the the computing equivalent of that as well, but it is essentially the digital version of a self-fulfilling prophecy. Like its success and the success of the network hinges directly on its adoption, which hinges directly on the fact that it is the only one of its kind. It's not the only cryptocurrency, obviously, as everybody knows, but it's the only Bitcoin. So
Yeah, and it continues to grow. The network continues to expand, and we've seen the acceptance of it of this administration. Trump and his sons are going in on Bitcoin. They've got $2 billion worth it in their Truth Social company. Their sons are running American Bitcoin, a Bitcoin miner, but they're also very interested in stablecoins. So it's been this story of two cryptos, Bitcoin and stablecoins, Tether and Circle and whatnot, really dominating the story of 2025. But you have written some pieces questioning stablecoins and how they might lead to the next blow up. What's your thoughts on Tether and the like?
oh, look, everybody knows what the deal is with Tether. Okay, like I was a professional short seller for 10 years. There's only one reason that people don't get audits. There's only one reason people don't get independent audits. Only one. If you got the goods, you ever catch somebody in a lie about some bullshit like, hey, like you don't have a Ken Griffey Jr. rookie card? And be like, yes, I do. I'd be like, all right, let me see it. Well, you can't see it, but I have it. Like, and it's like, all right, there's only one reason they don't want to show it to you. It's because they don't fucking have it, like. So when it got to a fever pitch some years back about Tether, and there were all these rumors out there that they were holding Chinese paper and all this other bullshit, and the idea is, look, get an independent audit and it's a wrap. And they don't do it. There's only one reason you don't do it, and it's not because you're not hiding anything. And so, look, the idea that, you know, stable coins are becoming like systemic at this point. They're going to be these vehicles for buying like a massive amount of treasuries, and they're pretty opaque and like in the case of Tether, like unaudited. Like, oh, we'll give you an attestation. It's like, fuck that. You know what I mean? Like, what the fuck am I gonna do? I'll give you a fucking attestation right here. Here you go. There's a fucking, that's him and Dumb and Dumber opening the briefcase. These are IOUs, sir. Like, this is my attestation. It's like, bitch, get an audit with a fucking letterhead from an actual audit firm. Like, this is not people on there fucking on Twitter making excuses for them. I'm like, you people just don't know how the world works. Like, being a professional short seller for 10 years, like, it's clear as a bell to me. There's one reason people don't get audits. So, look, whether they had a hole in their balance sheet or they still do or not, with Bitcoin being up, there's a chance, okay, maybe they plug that hole. I don't know. I don't know what the financial position is of these entities. I just know that they are going to be holding massive amounts of treasuries. And if they are not held to very stringent, strict audit standards, it is, in my mind and in my opinion, a behavioral economics 101 psychological certainty that they are going to abuse their power to print the same way the Fed abuses its power to print. No questions asked. And everybody should go and listen to fucking Jim Rickards on, who the hell was he just talking to? ITM with Daniela Cambone. Just go to the ITM trading podcast. Jim Rickards was just talking to Daniela Cambone like this week or last week. And he nails it. It's not a question of if, it's a question of when. When does the next shoe drop? When do enough people, when do you have the Madoff moment where enough people want their money back that you can't meet redemptions? Same question you're asking about the passive funds. It's the same question somebody will be asking about commercial real estate when it blows up. What is the tipping point where enough people want to fucking get their money back that any entity, whether it's a stablecoin company or whatever, has to go and sell their collateral, whether it's stocks on the passive funds or it's treasuries held by Tether, to meet those redemptions. And look, now there's these stablecoins are getting a ton of investments. I'm watching, like $500 million from this guy and that guy. When the Trump administration took hold, great. There will come a day when maybe those people want to cash out, or maybe, people want to sell their stable coins. And there will come a point when the coins will have to sell their treasuries to do that. And if it all happens at once, treasury market is very liquid, but you're not going to be able to sell fucking $1 trillion of treasuries in 6 hours, So like, they become systemic at some point if they can have that kind of profound concentrated effect on the bond market. And it just, I just watched the movie Inside Job yesterday or 2 days ago about 2008. I mean, every fucking thing they said about derivatives going into 2008, that they were unregulated, they were everywhere, they were cash printing machines, everybody was making money. I mean, I could just draw so many straight lines to what's going on with stable coins and with crypto in general, like even outside of Bitcoin. You got $2 trillion in fucking detritus just floating around in the crypto. You know how much dog shit there is out there in the crypto world? There's probably $2 trillion worth of it. There's no cash value to that stuff. There's no point where buying it makes sense. You're not going to be able to pick up $1 for fucking 80 cents like you would with a company that has a profit stream and some cash on their balance sheet. This shit goes no bid and the price is zero. And that's it. And you go from a fucking last price of whatever, 48 cents for Shiba Inu or fucking shitcoin or dickhead coin or whatever's hot. You go from that last price to fucking no buyers fucking buyer strike, zero buyers, right? Like I forget the old arbitrage. It was something like, no buyers or something, or like no buyers. So there used to be a sign for that back in the day. But you would go to no buyers. And then that's it. And so all of that shit is going to wind up getting ushered out at some point. I don't know when or how it's going to happen, but you know, stable coins are now tethering their way through the financial system and it's becoming part of the fabric of the financial universe. And everybody's sitting around like, this, nobody could see a problem here potentially. Like you have
Yeah.
a completely new nascent asset class that didn't exist 15 years ago. And now it's, 4 or 5 trillion dollars of the global economy, and it's interwoven into the US economy. And like, you know, the analogs to derivatives in the financial crisis were so obvious to me when I was watching that. I was like, holy shit, like this is stable coins right now.
Well, Tether's got $127 billion worth of treasuries, right? That's more than Germany.
Right.
And they're supposedly held by Cantor
According to
Fitzgerald.
Tether.
According to Howard Lutnick, the Secretary of Commerce, right? I mean, of course, you got to question him, but I mean, $127 billion of treasuries is a pretty hard thing to fake, right? Could that be a lie?
Well, they might hold $127 billion of treasury, but they might have $200 billion worth of Tether on issue.
Okay. Well,
You
I
know
think
what I
you can
mean?
also.
Like they might not be lying about the collateral. They may be lying about the other side of the fucking fraction.
Yeah. It
I
does
mean, otherwise you
seem.
got the world's best business model, right? You got $100 billion in fucking in treasuries, all right, that you're taking on as collateral to back stable coins that people are taking and that you have on issue. Say the treasuries pay 3%, right? So 100 billion, 10% is so that's $3 billion. You're getting in free money a year
Mhm.
just for doing nothing. Anytime these guys raise money, you should be asking yourself, like, what do they need money for?
That's
Like,
exactly. They're doing that
there
this
should never
week.
come a point where these issuers need to raise money because they essentially have free money machines. That's what
That's true.
stablecoins are right now. And so then you want to ask, like, okay, like, well, what do they need investors for? Why would they need to raise more money? But yeah, they could have $127 billion of fucking treasuries, but $200 billion in Tether on issue. We'll find
Mhm.
out when everybody wants their fucking money back, won't we?
Yeah. Yeah, and you do raise a good point in that they are looking to raise, I believe, $20 billion at a $500 billion valuation. And yeah, if you do have
Why?
why? That's the real
What do they
question.
need?
Why? Yeah,
What do they need? Do they need buildings? Do they need servers? Like, what do they need? Tell me. I don't know. I didn't look at the fucking press release.
they're building a skyscraper in El Salvador.
Are they?
Yeah, it'll be the
Okay. What does that run you?
not 20 billion. I don't think.
No, probably not even a billion.
No, but yeah, we've entered into a new world, and it's just but the same stories of graft and corruption seem to play over and over and over again, no matter how technologically advanced we get. That's for sure.
There's a lot of answers I don't have, but we'll have them all when the shit hits the fan. Trust me. I get all these messages all day, like, what's going to happen? Like, what's going to break first? Is it going to be this going this? Is commercial real estate going to cause Tether to do this? Is Tether going to do this to do this? Like, where are the bodies hiding? I just say the same thing. I'm like, look, the fraud's out there. I don't know where it is. There have been frauds probably trading as though nothing's wrong for the last year or 2 years at least. I don't know if they're equities, if they're cryptos. I don't know what they are, but they never come undone until the very, very, very last second. So they will go over and over and over again. They will repackage the shit. They will move the debt off the balance sheet. Just talking about fucking Carvana today. CarMax just got decimated today. Somehow Carvana is just putting up incredible numbers. I don't know. Like, where do these loans go? Like, who's buying these fucking asset-backed securities that they're selling? Oh, well, we found out that Ally Financial was buying some of them, and then they were going to buy some more, but then all of a sudden they're selling some to Al Gore's company, who happens to be on the board of directors. Oh, interesting. Like, they're pretty close to the company. Like, is that a related party transaction? I don't know. Whatever. Like, oh, how are they just able to put up great numbers when their fucking peers aren't? Like, how does their business model work? Where does the debt go exactly? Where do the subprime loans go exactly? Where's the fucking collateral going exactly? We don't know. It's like those old fucking TV shows. Stay tuned for next week because as soon as the shit hits the fan, it's going to be so evident that fucking everybody's going to be looking at each other like, how do you say it? You didn't say it. I didn't see it. Nobody saw. How could nobody see this? The signs were right there. Oh, look, here's fucking at John2643902 on Twitter, who said 2 months ago, he's like, the fraud's in this bank in Bermuda. Turns out it was. Like, nobody listened to him. It's Markopolis all over again. It's the whistleblowers on fucking Madoff all over again. So sit back, enjoy the fucking massive experiment in unprecedented monetary policy and the absolute circus freak show that is our economy. And that's why I like to own gold and silver. I can just sit back, and like the Chinese say, may you live in interesting times. Like, great, man. Call me this, call me a fearmonger, that, whatever. Okay, fine. I'm over it. I don't need approval from fucking anybody. I work with great people. I've had great jobs. I'm happy with where I am and who I am. I'm not trying to be fucking Jim Grant. I'm not trying to be Jim Cramer. I'm not trying to be Scott Wapner. Just watch. Just sit back. Just sit back and watch. It's going to get fucking good, man. It's going to get real good, like, soon. Give it 12 to 18 months, and then me and you will talk again. I'll even wear the same shirt just to memorialize this interaction. And we'll roll this clip here of 2 minutes of me saying, like, we're going to find out. And I'm going to be like, told you. It was right in plain sight, right?
Absolutely. And in closing out, I mean, I think one reason people really enjoy you and your commentary is your natural skepticism and your willingness to question everything. How did you develop that skill? Were you just born with it, or did the world and its dirtiness make you this way?
I learned how everything worked, man. Like, not like I'm an optimistic guy. I'm a lighthearted person. I joke a lot. I'm calm. I'm like, I really only get like amped up when I talk about this stuff. But if you see me like outside of here, I'm pretty calm, like relaxed person. And I'm an optimist, like, but I just saw it firsthand. Like, I've earned the right to be skeptical. Okay, like, look, first, everybody learns about macro the same way I did, right? Which is like, I was raised in a house where like I was taught to underconsume and save, and that was a virtue, and that savings could be put towards investment going forward, and you want to spend less than you earn. And that made sense. And it made sense in fucking my bank account. It made sense in my parents' bank account. It made sense, in our local community. It made sense for our church when we looked at their financials. It made sense at local corporate businesses when you looked at their financials. It made sense at the university that I attended, where like you look at like the university's financials and what they charge, and like, okay, makes sense on a corporate level and on a state level when you start learning about how business works. And then all of a sudden you get to the sovereign level, and none of it applies. None of it. Everybody's like, whoa, 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 whoa. You got everything all wrong, And then you hear about MMT, and you hear about, you hear Stephanie Kelton say things like, oh, the deficit's a myth, or like debt is money we owe to ourselves, or we can repay debt by taking on more debt, or the debt doesn't exist, or we have infinite cash, or Rashida Tlaib, let's print $1 trillion coin. And you're like, are these fucking people brain damaged? Like, this is what a PhD gets you? So, yes, there's some skepticism from that. But then I also, worked with some of the best short sellers in the world. And starting back in like the early 2010s, firsthand saw tens of billions, if not hundreds of billions of dollars of fraud on US listed exchanges. You come up as a kid thinking like, oh, there's auditors, there's exchanges, there's the SEC, everything's regulated, everything's good. And it was one fraud after the other. Companies that, we were going and investigating, companies that like OGs like fucking John Carnes and Muddy Waters, and like even Citron was doing a bunch of the Chinese reverse mergers back in the day. They were going to the plants in Guangzhou, China, and they just didn't exist. You'd have a whole SEC filing full of financials that were completely fabricated. They call those the big lie, a lie so big that nobody would ever believe that it's false, right? Like, surely they're just fudging the numbers a little bit. No, the plant isn't there. Here's the plot of land, and the fucking plant isn't there. It's a rendering, like that kind of fraud over and over and over and over again. And it's not just US listed China based frauds, although I would never invest in anything US listed China based. I don't care how good the risk return is. It's not just that. It's just innumerable fucking frauds that have happened in the US. It's very easy behavioral psychology 101 that people are going to push it and push it and push it until something breaks. I mean, it's just human nature. And so it's just, it's as clear as day to me that you should be skeptical. You should be cynical. And that's how I am by nature. I mean, look, there's a lot of great companies out there that are undervalued, that have great management, that are full of integrity, that are cash cows, that are wonderful, but like, you have to earn that fucking like respect from me. You have to earn that, like, you have to earn that trust from me. And everybody should be like this. Everybody should be aggressive in, who they give their trust to as an investment. And if you are Tether and you just simply refuse to get an audit, you don't deserve an iota of trust from me. Everybody else has different standards than I do. But for me, after, 12 years of being a professional short seller, investigating probably 500 companies, watching how these companies respond to certain allegations, uncovering all types of fraud, everything from the factory doesn't exist to, CapEx, fucking OpEx fraud to fucking revenue recognition fraud. Like, you see it all, and you see all the bullshit excuses that companies use. And you just understand that, like, hey, if you got 10 auto companies and, they range, whatever, their net margins all range from 7% to 7.7% because it's a super capital intensive business. And then you have one more auto company that has 15% margins and hasn't offered any, new best practices in how they're putting things together or how they're selling or anything. You understand, like, something's wrong there. Like, nobody just doubles fucking net margins in a capital intensive business that's been around for 100 years without pulling some strings. So that's it. You see a million of those, you start to fucking understand who can and can't pass the sniff test. And for me, just stablecoins don't, but that's okay. That's just me. But that's how I got to this point. I'm not trying to be Mr. fucking skeptic, market bear. I don't really care. Like, you don't have to listen to me. Go fucking listen to yourself. Listen to whatever you want to listen to. But like, that's just how I am. And it served me well, by the way.
Yeah, and it's also just the era that you came up in, right? I mean, post 2008, money printing, and that just leads to fraud. And so I think we both came to the same conclusion, which is sound money. You're more of a gold guy. I'm more of a Bitcoin guy. But at the end of the day, we fall back to the same philosophy, principles, and hopes for a better economy and a better world in the future. Chris, well, thank you so much for your time. This was really awesome. It really flew by.
Thank you, man. I appreciate it.
Yeah, if people want to find out more about QTR, where should they go?
You can just really, I write on my Substack and I curate some content on my Substack. So it's quothetheraven.substack.com. There's about half the stuff's free and half of it's paid. So you can come over and check out the free stuff if you want or whatever. That's it. That's really where I spend most of my time.
It's amazing commentary like this, not just on the markets, but on life wider in general. It's fun. It's worth a read. It's worth a read. I've been listening to this guy for quite some years now. It's so weird. People
introducing me like, oh yeah, amazing insights. I'm like, dude, they're not that good. Like, I dictated those into my iPhone while I was sitting on the toilet. Like, give me a break.
Well, you heard it here first. All right, Chris. Thank you so much. And I'll have you on in a year. Same. You're back.
12 to 18 months. So we'll call it 15 months.
Boom. You got it.
All right.
Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 sats in the chat. See you next week.